Okay, what's up, guys? It's me, Alexander Jarvis from alexanderjarvis.com, founder of 50Folds. So we're going to go into the next video now for the SaaS financial model. So the sheet we'll be going through is the P&L actual. So we'll just tab across here to the P&L actual. You'll see there's a sort of general guide will tell you what's going on. And we'll see, because of the settings we have, that there are 3 months of data that we're going to fill in for this year, or the year that we have to date. If you need to change that, then you go back to the formatting sheet, change the date that you want your forecasting actuals to start, and you're off to the races. So now, I generally recommend one of the first things you should do is just get this out of the way and fill in this page. So you'll see everything that you need to fill in is in the yellow boxes, okay? So you don't need to touch anything else that's not in a yellow box, and pretty much everything you should fill in, okay? So the first thing you can do is go to your whatever KISS metrics panel or however you're tracking your data and know how many monthly customers that you have. And you're just going to type in the customers that you had at the end of the month. And then the last column, these data, it's this column's data for your MRR and for your customers is going to feed in through us the model. So that's quite, those are sort of quite important numbers. So you're going to put in your monthly customers. It used to be the case where you then put in your annual customers here, but these are going to be put into the annual assumption sheet, which I'm going to cover in the next video. So you're not going to do this just yet. And the next thing you're going to put in is what your monthly bookings or billings are. And this model, bookings and billings, are basically the same thing. So you put in your monthly numbers here. The annual ones, again, are going to come through the annual assumption sheet. And these will automatically calculate what the total amount is. Then you want to put in what your MRR is on a monthly basis. So it should be ideally getting larger. And then you're going to whack in what your professional services are, if you have them. If you don't, you just, if you have the blank model, if you bought that, or if you got the filled in one, just put everything to 0, and then you don't have professional services anymore. That simple. And then your gross revenue will be added up for you. Then if you have discounts and vouchers, you want to pull out that data so that what we really want to see is get an idea for how much as a percentage of your revenue you're actually putting on discounts and vouchers, so that when you go into your P&L forecast and you're putting in, whatever the discounts and voucher rate is going forward, it should, unless there's a reason for however you're doing your marketing, essentially sort of fall in line. So if you've been doing 2% on average, then that P&L forecast number going forward should probably be, 2%. So cancellations, if you have them, you're going to put in what those numbers are, and that's going to deduct out of your revenue. And then we're going to start with, your P&L data. So we have our COGS because we want to calculate what our gross profit margin is. So you're going to put in what the staff costs are, right? What the actual costs that you're spending on for your staff, they're all going to go in here. And then for payment costs, if you're using Stripe or PayPal or whatever that is, whatever transaction costs you're spending, you're going to put those numbers in the payment costs. And then for server costs, your AWS, those sorts of things, they're going to go in here. And then email, if you've spent a lot of money on email, some people do, some people don't. It kind of really depends on if you're sort of lower end consumer type business, maybe you'll spend a lot more money on email costs. It's more of like an e-commerce type thing, but you'll whack in that cost as well because it's one of your COGS. Now, something important to notice is for all the numbers in the first column, I've told you if you should put in as a negative value so that you're putting everything in correctly, okay? So you shouldn't mess this up if you just make sure negative value, all right? These are obviously positive values, hopefully. Next, we're going to deal with your online marketing. So what are you actually spending on paid traffic? So if you're doing AdWords, Facebook ads, all these attributable things, that's going to paid traffic marketing. And then for offline marketing, this is basically non-attributable generalized spend. You do flyers or something, but you don't really know if it's attributable or not. Turning up to trade shows, whack that offline marketing and thing in here. If you have bad debt, credit card fraud or something, if that maybe is a thing for your business, put in those numbers. Otherwise, just, do the magical set everything to 0 thing. Then we get our gross profit for OpEx. And then the final things we want to put in are the big three buckets for everything you spend on your G&A, your R&D, and then S&M, depending on how you're categorizing these in your business. So G&A is typically going to be like office costs, like your management staff. R&D is obviously going to be developers, engineers. So if you're a SaaS business, you obviously have some of those. And then S&M is going to be, bear in mind, so we've got up here your paid traffic online marketing. The S&M is therefore any costs which are attributable to the sales and marketing team that you have, right? So bonuses, salaries, if you're attributing actual costs to them for rent something, for getting fancy with it, you can whack that in. Otherwise, just do the best that you can. It's useful to know what these numbers are going forward so that you can see the relative ratios as they are comparing to your forecasts. Depreciation is coming automatically out of the D&A sheet. It's not really D&A because it's only depreciation. But anyway, someone just asked me actually the other day about capitalizing development costs, which is technically amortization. I don't do this in the model because it's sort of country tax-based thing, and I've tried to build this model to be generally applicable to everyone. And frankly, the model's already so large that I don't think you really want to have too much stuff in it because it'll just distract and confuse you. So depreciation is calculated automatically. Income taxes are calculated out of the depreciation tax sheet as well. Just in the formatting sheet, you can set what your income tax rate is or your corporation tax rate. Should probably change that to corp tax. And then that's calculated automatically. Where are we now? So then we get down to net income. Now we want to make some adjustments for your operating cash flow. So we don't have CapEx in your P&L. So you can put in whatever CapEx in the negative that you are spending. That could be, like tables, chairs, laptops, whatever. Monthly bonuses. So if you have bonuses that you're paying to people, or they are accruing for salespeople, etc., you want to put these in, and then the model will automatically pull those out. And at the end of year, when you're going to be paying those bonuses, will effectively pay them out. Okay, so put in the accrued monthly bonus to date. And then if you've actually made an annual bonus already, then you're going to pay that out now, okay? So let's say, I don't know, for some reason your end was January, then that you would put that number in here, and then the model will effectively just then accrue these numbers, right? You don't need to fill anything else here. If you have cash in the bank, hopefully, you're going to whack that in. And then if you fundraise during that actual period, here's where you're going to put in the fundraising numbers. Is there anything else I should tell you? I think we're pretty good. If you've got any questions or if I've missed something, sound out in the comments on YouTube if you're there, and let me know if I've missed something, and I can update the video to basically answer any questions that you have. But this should all be relatively simple. If you have been tracking your numbers like you should, you've got an accountant, some little bean counting nerd, they should have the numbers for you. So get them from them, whack them in, and then every month as time progresses, you want to change the date, the formatting, and then update your actuals. In here, and you'll be done. So hopefully that answers all your questions about how to fill in this sheet. All right, guys, I'll see you later. Bye.